Hello my Smooners, welcome back to being Mrs. S. Now I'm going to sprinkle some BGM on you. Okay, so I think this is my first front face video of the year. So let me start by saying Happy New Year to my beautiful Smooners. If you are new to my channel, welcome, and I'm happy you were here. Please do me a favor and click on that beautiful subscribe button. Do that and become a part of the Smooners community. Hey, consider becoming a full-on member and help grow this channel. It is a wonderful community to be a part of. And also, please check out Smoon City, my merch store, for a whole lot of cool merch designed by yours truly. I thank you in advance for your support. And so cheers and welcome to the Smoon universe. Happy New Year. This is going to be a banner year, so let's make it a banner year, y'all. Okay, I know it's like all the way, we're going to February, you're just saying Happy New Year. Well, this is my first front face video. Alright, so this video is going to be thrown into the Let's Talk Money playlist. And so I'm going to start by telling you why we're going into this area. I told you it's going to be no holds barred channel. I'm going to be talking about any and everything. That's what we're going to be doing here. So I saw a reel on Insta a few months back where some girl was talking about how she was excited about being a new homeowner, only for her payments to go up by over $1,000 after a year of being in the home. And she was so upset. She was bad-mouthing her realtor because she thought her payments were going to be the same forever, and her realtor did not tell her, blah, 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 blah. So while I can empathize with her, I'm quite sure that her realtor probably explained her payments and how that was going to work to her. And if it wasn't her realtor who did that, her mortgage broker most definitely did. And if perchance they were the worst to ever do their jobs, it still doesn't totally absolve her from doing her own research, right? I'm all about personal responsibility. So let's talk about that a little bit. A lot of times there's a misconception about fixed mortgage payments and the expectation that they will not change on account of being fixed. So if you have a loan from the bank and are required to make monthly payments, especially when you're required to have an escrow account, your payments typically consist of what we call PTIA or PITIA, which is principal, interest, taxes, insurance, your homeowners association if you live in a community that requires that, and PMI or MI, which is private mortgage insurance or just mortgage insurance if you have an FHA loan. The fixed only covers the P&I, which is the principal and interest when you have a fixed mortgage. Those typically don't change. The bulk of your payments in the beginning of your payments will go towards paying down the interest in the beginning years, and then it evens out towards the middle, and towards the end you're done with the interest and you're done with the principal. So the interest gets paid first and then the principal till the mortgage is dead. That's essentially what mortgage means. So however, your taxes and insurance will change because those two figures are tied to the property valuation and possibly other external factors. So your property value is going to fluctuate in value, and that drives how much taxes you pay and what your insurance company, those obviously change from time to time as well. So after your first year, especially if you have a new construction, there's going to be an escrow analysis and things like that. Sometimes you get a check back because of how the escrow analysis is done in the beginning. So you think, hey, you've got a windfall. And next thing you know, you either have an escrow shortage or whatever the case may be, because now they've done they've got the proper numbers for your taxes and so on and so forth. So today I will be sharing some vital information regarding home buying, specifically for the first time home buyers, the FTHBs. So first, let me tell you a little bit of my professional background. I have a background in computer science. That's what I went to university for. And then I have a professional background in banking and finance with specialties in analytics, regulatory compliance, anti-money laundering, housing and credit counseling, real estate brokerage, and mortgage services. So now that I've said this topic is not geared towards telling you what to do. It is strictly to inform and entertain. So I'm not saying because I've told you this, it's gospel. I'm saying this is what I know, but if you want to apply it to your own situation, you need to first speak to your banker or your real estate or mortgage broker for your specific needs. So buying a home for the first time, though very exciting, is a very daunting experience. Now, because I'm talking about first-time home buyers, let me start off by telling you that a first-time home buyer can be anyone who has not held any ownership interest in any home in the most recent 3 years. So maybe you bought a house 4 or 5 years ago, you sold it or whatever, and you haven't owned property within the last 3 years. You could be considered a first-time home buyer with respect to securing a loan for the purchase of that property. So, hot take. According to a Federal Housing Finance Agency working paper, first-time home buyers were more likely to be seriously delinquent or have experienced foreclosure within the first 5 years of loan origination. And this is in comparison to people who have been homeowners for not the first time. And this happens a lot. So for this reason, I felt, maybe I should share some great knowledge basis for anyone looking to buy a home for the first time. This is something that I feel like people should have at their fingertips, because in the excitement of buying your home, you just rely on everybody else except yourself. So today I'm going to be sharing some great websites, or should I say must visit websites for a first-time home buyer before deciding to purchase a home for the first time. You want to go to these websites. These are the websites to go to first. All links will be provided in the description box below. I'll do my best to provide the specific pages to visit on those sites, but definitely feel free to explore the websites for yourself. All right, let's get into it. The first website is CFPB. The CFPB is the Consumer Financial Protection Bureau. It's a U.S. government agency that implements and enforces federal consumer financial law and ensures that markets for consumer financial products are fair, transparent, and competitive. So basically, any bank, lender, or other financial institution or company that provides goods and services to consumers are under the purview of this organization. When those organizations are bad or they treat their consumers unfairly, CFPB rides in on their horse, honey, and they slap fines left, right, and center on those buggers. So why is this a great website to start with? Well, the CFPB will help you understand what to expect regarding fees and charges, and if those fees and charges are lawful and necessary. Gotta get some water into the esophagus. Okay, the second is HUD. H-U-D, HUD. HUD is the U.S. Department of Housing and Urban Development, one of the executive departments of the U.S. federal government. They provide and enforce the national laws, programs, and policies for fair housing. Why is this a great website to start with? Well, HUD is great because they have a universe of information even on the state level. So United States of America, you have federal laws, you have state laws, and in some states those laws don't align, they're a little bit different. But you can get the information from HUD, the HUD website. They can provide you with home buying programs within your state, HUD-approved housing counseling agencies, and a wealth of other vital information. HUD also offers FHA, which is the Federal Housing Administration loans. And FHA loans have been a very great long-time source of assistance for a lot of first-time home buyers. So you're going to see a lot of first-time home buyers going the FHA routes to get loans. The third is the IRS, the Internal Revenue Service. Pretty self-explanatory. You've got to know what's yours and what's Uncle Sam's. If you go to the IRS websites, you can actually look up tax laws regarding buying property or selling property. The fourth is FICO. FICO, the Fair Isaac Corporation, developed the system for calculating credit scores. They used information generated by credit reporting agencies like Experian, TransUnion, and Equifax to create a scoring system. They've become the industry standard for determining credit risk. Credit scores are used by lending institutions to predict how likely a consumer is to pay back a loan and if they will do it on time. Credit scores are also used to determine interest rates and credit limits that will be offered to any consumer. So, getting acquainted with the FICO website is great to start with before you embark on your home buying experience, because you want to understand your FICO score, and understanding your FICO score puts you in a great bargaining position when it comes to getting a mortgage loan. So you want to understand your credit score, you want to understand your debt, what you're carrying as far as debt. The fifth and sixth are FNMA, the Federal National Mortgage Association, better known as Fannie Mae, and FHLMC, Federal Home Loan Mortgage Corporation, better known as Freddie Mac. These two organizations were created by Congress many years ago to provide liquidity, stability, and affordability to the mortgage market. Freddie and Fannie buy mortgages from lenders to hold, or they will repackage them into mortgage-backed securities to be traded. So just like FHA, they guarantee the timely payments of loans, which in turn attracts more lenders, thereby allowing for a pool of available funds. So there's more money in the market for people to borrow. They are supervised by the FHFA, the Federal Housing and Finance Agency that I mentioned earlier. So when a consumer applies for a mortgage loan and you hear conventional loan, more than likely you are applying for a loan that is secured by either Fannie or Freddie, and it will be underwritten using the guidelines that have been set by them. So very important. Why are they group websites to start with? Per the National Association of Realtors, as of 2023, 70% of the conventional loans are owned or supported by Fannie or Freddie. It is a good idea to familiarize yourself with the requirements and then the support that they have available. And the seventh is the VA. We're not going to leave our military people out of this because they're special. The VA is the U.S. Department of Veteran Affairs. The VA will guarantee a portion of loans provided by banks and mortgage companies to veterans, service members, and their eligible surviving spouses. It is a fantastic website to start with if you are in the military, or you're a service member, or a spouse of a service member, because the VA home loan benefit is a lifetime benefit. The VA does not require a down payment. The interest rates are typically low. closing costs are very limited. So like I said, if you're in the military, if you're a service member, a veteran, or spouse of a service member, the VA should really be your number one port of call. So all these websites I've talked about, like I said, they will be in the description box. So along with your real estate broker and mortgage broker, these are great resources to use as a starting point to your home buying experience. If you're thinking of securing a loan to facilitate the purchase of your new home, these websites should be your ace boom coon, your best friends, your number one place to go to, because they carry a whole lot of information there to help you along the way. So I hope you find this information informative. Don't forget the links to the websites are mentioned in the description box. And if you stayed all the way to now and have not subscribed, go ahead and subscribe, because there's more vital information where that came from. Thank you for joining me. Until my next video, don't forget to live, laugh, love, and I'll circle back. Bisous, bisous. Love you, my spooners.